Most people know Iren as a Bitcoin mining company, and for most of its life, that's exactly what it was. But something changed, and the company that was quietly digging for digital gold just signed a $9.7 billion deal with Microsoft. Today, we find out if the transformation is real. Iren Limited started as Iris Energy back in 2019, an Australian company with a simple idea: build data centers powered by cheap, renewable energy in places nobody else wanted to go. Remote Canadian forests, windswept Texas plains, places with stranded hydropower and no one to use it. They weren't trying to save the world. They were trying to mine Bitcoin cheaper than anyone else. And for a while, it worked. But the founder saw something else coming, something bigger than Bitcoin. Here's what Iron understood early: a data center is just a building with computers, power, and cooling. It doesn't care whether those computers are mining crypto or running AI models. The infrastructure is the same. So when the AI boom hit and hyperscalers started hunting desperately for power, real power, in gigawatts available right now, Iren already had it. 2,910 megawatts of grid connected capacity secured across more than 2,000 acres, built on renewable energy, ready to deploy. That's the pivot, not a business model change, a customer change. And today is the day the market finds out exactly how that pivot is going. Iren is reporting Q3 fiscal 2026 results after market close, earnings call at 5 p.m. Eastern. The street expects $213 million in revenue, up nearly 44% year over year. EPS is projected negative 18 cents as heavy capital investment weighs on the bottom line. The key number to watch isn't revenue. It's the first real contribution from the Microsoft contract and whether management confirms the $3.4 billion ARR target for year end. Let's talk about the financial story. Full year fiscal 25 came in at 501 million in revenue, a record at the time. Then Q1 fiscal 26 exploded, 240 million in a single quarter, up 355% year over year. The catch, 97% of that was still Bitcoin mining. The AI ramp hasn't fully shown up yet. Q2 came in at 185 with a $155 million net loss. The transition is expensive. Q3 today is the first quarter where Microsoft revenue should start flowing. This is the inflection everyone is waiting for. The Microsoft deal is the centerpiece of everything: $9.7 billion, 5 year term. NVIDIA's latest GB 300 Blackwell GPUs deployed at Iren's 750 megawatt Childress, Texas campus. Microsoft prepaid 20%, nearly $2 billion to fund the build out. That works out to 1.94 billion in average annual recurring revenue from this contract alone. To put that in context, Iren's entire revenue for fiscal 25 was 500 million. One deal is now worth 4 times that every single year for 5 years. And Microsoft is just the beginning. In March, Iren announced purchase agreements for over 50,000 NVIDIA B300 GPUs, bringing their total GPU fleet to 150,000 units. They backed that with a $5.8 billion hardware commitment from Dell Technologies. Then last week, they announced the acquisition of Mirantis, a $625 million all stock deal that brings Kubernetes based cloud software and enterprise services into the fold. Iren isn't renting out servers anymore. They're building a full stack AI cloud platform. So, what does the roadmap look like? Right now, today, they're closing Mirantis and beginning phase one of the Microsoft deployment. By mid 2026, the full GPU fleet should be operational and Microsoft revenues hit full run rate. By end of year, the target is 3.4 billion in annualized recurring revenue, 100% from AI cloud, zero from Bitcoin mining. Analysts have a consensus price target of 69.36 with a buy rating ranging from $39 to $86 a share. So, here's the honest take. The bull case is straightforward. Iren has a $9.7 billion contract from the most creditworthy company on earth. 2,900 megawatts of renewable power that competitors cannot replicate quickly, and a management team that has successfully executed one of the fastest pivots in data center history. The bear case is equally real. 97% of revenue was still crypto just last quarter. The stock trades at 22 billion on 400 million in annual run rate, and every major milestone, GPU delivery, regulatory approvals, Mirantis integration, is an execution risk. This is not a sure thing. But tonight at 5 p.m., we find out how close they are to making it one.